everyone doing tonight? Oh, cool. All right, hey, thanks a lot for coming out tonight. This is the very first Start Club. We'll be doing it every month. My name is Casey Lau. You may know me as the co-founder of Popcorn Network, but also one of the co-founders of startupshk. And we've obviously gone quite far in this whole Fight Club thing, so get ready to fight.
Or pitch.
So here's the agenda. Yeah, or pitch, rather. Here's the agenda. I'm going to do a brief introduction for some people who are new here. We're going to have an interview with the founder of Securities, sitting right over here, looking handsome as hell. We're going to do startup pitches. So we're going to have 3 startup pitches tonight with a panel of judges. If you want to pitch, if it's your first time here, you're supposed to pitch. But if you don't have a pitch, it's okay. But if you want, bring up your deck, we'll run it, and then we'll do some networking. Here are the 8 rules of Start Club. Everybody bring out your mobile phones. Remember this. Because the first rule is you must tweet, share, or blog about Start Club. All right? That Twitter hashtag tonight is hashtag Start Club. The second rule of Start Club, you must retweet or reshare anything about Start Club. The third rule, pitches will not go long as they have to. 5 slides, 5 minutes each. Rule number 4, if the timekeeper says stop, the pitch is over. Rule number 5, no live demos, no animated transitions, and no PowerPoint. Your idea should be exciting enough. Number 6, no ties, jackets, or pantsuits. Keep it casual. If you want to take off your shirt, your shoes, it's okay. Number 7, anyone can pitch, but only one pitch at a time. And number 8, and this is the rule I want to tell everybody, because next time you're going to be on stage, this is your first time to Start Club, you have to pitch. All right? Let's get it on. Let's go. startupshk, what is this all about? They're the 4 handsome guys who started this whole thing. So we started this whole thing in a coffee shop in Hong Kong, just a few guys together who did startups. Basically, we needed a place to talk, showcase each other's ideas, get influences from each other, and it grew. More people started showing up, and more people started showing up, and more people started showing up, so we opened our own space called Boot HK. John opened it up, it's in Wan Chai. Now there's a bunch of them out there, so we kind of started it all off, but it's great because we love all those co-work spaces in Hong Kong. We have Startup Mondays, so if you've been around for a while, you've known that every Monday we have a meetup at Boot, but now we decided to change the format a bit and do Start Club once a month, and then every other Monday we'll have a Startup Monday at Boot. We also involve Start Weekend. Some guys here tonight are on the Start. We met them doing Start Weekend. Friday night you come in, come up with some ideas. We do a bunch of whiteboard, a bunch of concepts. Then you have 48 hours to come up with a pitch. And Sunday night you pitch to the judges. Very exciting. We've done a couple of these. And then we have demo nights, like we have tonight. We've had it at Hyde. We've done it at all kinds of places in Hong Kong. And of course, our landmark event, Startup Saturday. Basically, everybody wants to get a lot of exposure for their startup. So what we did was we did a one-day event. We did it in 2010 at Cyberport. We did it at the Island ECC last year. Dave McClure was in town from 500 Startups. You know him. This is a very lucky time. And we also crossed it over with Asia D. So we got Brian Chesky, the CEO and founder of Airbnb, to also talk. How many people were at that event here? Can I just see a raise of hands here? Okay, great. It was a very exciting time in Hong Kong to see these guys talk. So I want to just show you this. Who's on Google Plus here? Please put up more than 3 hands. Okay, come on. Awesome. If you use your iPhone or your Android phone, get the app. And if you navigate to the page, if you take a picture of from the event page, you will go to our startupshk, the Start Club page on Google Plus. So if you go there now, you'll see pictures that I've been taking, some other people have been taking. Please join in, take some photos, and share with everybody because it's kind of cool little technology thing that we, kind of should support. I want to thank Hong Kong Commons. So they basically have donated a incorporation package tonight. So if you're a new startup and you need an incorporation package, it's a $3,000 Hong Kong company setup package that we'll award at the end of the night to somebody who's still here and sober. Hong Kong Commons, as you know, is a co-work space. They have one in Sheung Wan, Festival Walk, and somewhere else as well. Jong here? Okay. All right, that's enough. Let's start. Let's bring up Mikaal up onto the stage. Give him a round of applause. Come on. Can we bring the lights up a bit to get on the stage? How you doing?
Very good.
So if you don't know Mikaal Abdulla, he's the co-founder and CEO of Securities.com. Obviously a lot of you here tonight must know who he is and here to listen to him. He was a former senior VP at E-Trade. So basically he went to E-Trade and said, yo, I can do better than this, right? He's responsible for marketing strategy across 15 countries. He's got an MBA from Columbia and London Business School, but really, the real schooling was Securities.com.
The MBAs were useless, I can attest.
Okay, so we're going to do this a little bit different format. I mean, Mikaal can do a whole talk by himself, but I wanted to guide him through it. The purpose of tonight is basically to walk you through his creation process of a startup, how he got funding, how he developed it, how he markets it. Who here knows what Securities is?
I have an account.
Okay, everybody knows Securities. Okay, great. So maybe you want to tell everybody a little bit what exactly is Securities?
Sure, so as Casey said, my background was at a company called E-Trade. It was a US online brokerage, so online trading and investing. I was there for about 11 years, left a couple of years ago in order to launch a business here in Hong Kong with the idea that when I originally launched E-Trade in Hong Kong, it was over 10 years ago, and I was just stunned sort of over time how the market here never evolved. Continued to be very, very traditional. Brokers here continue to distribute through branches, very much offline. So from my perspective, it was a great chance to come in here, disrupt, and do something different, with the view that we wanted to bring the idea of social into trading. So rather than people have to go offline and sort of share ideas with your uncle or with your broker or through a sort of declarative message board, let's build a social network at its core where people can share ideas knowing all the information is real with the ability to trade, and all of that from a sort of fully personalized trading dashboard. So that's what we did.
So what did you learn from E-Trade?
To be honest, a lot of what not to do. When we were at E-Trade, it sort of has this perception as a very fast company, but I think the main thing was one of speed. So at E-Trade, for example, I always worked for E-Trade's international business. We ran 14 countries outside of the US, across Canada, Europe, the Middle East, India, and Asia. But all of the product development was done in the US. So naturally, when you need to get anything done internationally, on a list of 99 priorities, we were always the last one. So nothing got done. So that really taught me, I think, first and foremost, to own development. So all of our development, all of our design, we do internally. We don't outsource any of it. We don't offshore it. We do it all ourselves. So that was probably the biggest lesson learned. And in addition to that, I guess, E-Trade as a business and being a big online business, started marketing online over a decade ago. And the marketing budgets at E-Trade at the time, we were spending upwards of $500 million a year in marketing. So with a budget myself of $50 million a year, you're allowed to make a ton of mistakes, learn as you go. So again, learned a lot of sort of what not to do and learned a few tricks of what works, and then sort of brought that into eight.
Okay, so just in case you're wondering who this guy in the blue shirt is next to you, it's Jason Lee. He's doing art notes tonight. So everything that Mikaal was saying, we'll do a little cartoon for it, and we'll publish it on the blog later on. He's not a crazy guy in the background. Okay, so you came up with the idea like this. So did you quit your job, like right away?
Quit my job? Yeah, it was a tough decision, having been there for so long. I think the toughest thing is just one of comfort. So, I was here in Hong Kong, I was on an expat package, have 3 kids, so it definitely was...
3 kids?
3 and another on the way.
There's your staff right there.
So, with 4 little ones, it's really a tough decision. And in many respects, it's a lot easier not to take the plunge than to do it. But I've said this before, but I was just sort of very honest with my wife, and I like this story, and I just went up to her and said, 95% chance, this fails, 5% chance we buy an island in the Pacific. And she just said, go for it. So
she likes islands.
She likes islands. So I was fortunate enough, being an early employee with E-Trade, I had options. They did pretty well, so I was able to sell those, and it was that that sort of earnings that funded the beginning of 8.
All right, so you know the idea, you see everything, you quit your job. How did you start to raise money?
Okay, this is where it's starting to get hard. So when you have your big idea and you start to develop your plan and you've got your great business plan, everything's mapped out, it's perfect. You sort of feel no one can touch you. You sort of look at your revenues, you look at your profits, you put a multiple on your profits, and I'm going to exit at $100, $200 million, and nothing's going to stop me. Those are the good days. So it was really easy to build a plan, but when it came time to start raising money, that's when it really was humbling. So I'll be sort of very honest about my own process going through this, because I think hopefully you can learn something from it. I was very naive going into the process of raising capital, and when I first approached, my first approach was to let me get in touch with venture capitalists. We had a good team behind us, good technology, good idea, big market, so all of the pieces were there, and I said, naturally I think this will be a pretty easy business to raise money for. And at the time things were very hot, everyone was getting funded. But the mistake I made originally was basically developing a well-crafted email, shot it out, did a ton of research on who all the right VCs were, shot it out to 150 of them, and got 0 replies. I got maybe 2 people that wrote back, and it was a very polite no, but the vast majority of them just didn't bother replying. And I say I was naive because you don't get a meeting with a VC unless you get an introduction. So a friend kind of tapped me on the shoulder and said, you're doing it all wrong, you need to get introductions. So I got introductions, and I was fortunate to meet with some big VCs, sort of Sequoia, Kleiner Perkins, Benchmark. Got in front of these guys, and they all asked me the same 2 questions. And the 2 questions were, how do you scale to become a billion-dollar company? And what's your China strategy? Very consistent across the board. As an online trading company, we can't have a China strategy today. I have 101 ideas, but can't implement any of them. So there is no China strategy, 1. And 2, are we really going to scale to be a billion-dollar business? Probably not. It would be great, but this whole sort of notion that you hear coming out of Silicon Valley, change the world, what are you going to do to change the world, how do you build a billion-dollar company? I mean, quite honestly, it's a lot of bullshit. You can probably count the number of companies that are going to be worth $1 billion on one hand, and you just think about all the companies out there that are starting up now. So the likelihood that happens is very, very small. So rather than sort of pander into sort of trying to build $1 billion business plan, which of course would require 100 times or 10 times the capital I needed, I basically pivoted, started looking at private investors, and that's where I kind of struck gold in terms of raising the money. My first decision was I wanted to raise all the money up front, so we were looking for a raise of $8 million US. Wanted to raise enough to get us to cash flow positive, so if we wanted to go back for another round, it would be in a stronger position.
So you 8 million, where'd that number come from?
The 8 million was just based on our projection. 8 securities, we have 8 investors, it's all kind of weird.
So lucky, you're poised to win in Hong Kong.
But yeah, so it was 8 million US. It was a really tough process, but our sweet spot in Hong Kong happened to be private offices. So we found groups of investors in Hong Kong. Some of them were entrepreneurs that had exited. They had $250 million fund. They were our first investors in. And when that first money came in, after 1,000 no's, closing the round was dead easy because it was validation. No one wants to take the lead, but until someone is brave enough to take the lead and put the first money in, I think closing the rest of the round took us 3 weeks. And then there was so much demand, we probably could have raised 20 million. Whereas before that first money came in, impossible to raise a buck.
So who was that first investor then?
The first investor was two French entrepreneurs that actually sold their business to Lian Feng some time ago. They've been in Hong Kong for 30 years. They run a private fund now. They like the business. They were the first investors in, and then we had 7 other private investors follow. And we closed the round. So everyone on average put in $500,000 to $1 million.
So what did your business plan look like? And did you have a working prototype to show them at this stage?
Yeah, so when I was bootstrapping, and I put a lot of money into this, the reason being that financial services is a very capital intensive business. Not easy to, in terms of being a lean startup, maybe we're a lean financial services company, but by sort of normal definitions, it takes a lot of capital to develop it. So when I bootstrapped, I actually self-funded the development all the way through a working prototype. I wanted 3 things. I wanted an end-to-end website, a working prototype of the trading platform, this, and a product video. And a product video just so investors could click on it, it was easy, they could see what I was up to, and then hopefully that would drive a meeting.
A product video? What is
Product
that?
video. So just a product demo, 2 minutes, 1 minute to 2 minute overview of the product, try to get them excited, put a nice soundtrack on it. It was just basically a means to get meetings, knowing that no one's going to read a big PowerPoint presentation. So if you're building one, don't bother. I think 3-4 pages is the most that an average investor is going to look at. Build a nice video. You can do it fairly cheaply. Do a screencast if you have to for free. Send out an email with a link. Let them see what you're doing. Try to explain it as quickly as you can. And hopefully that entices enough interest to get a meeting, or at least for them to forward it to someone that may be interested.
So now you raise your money. How did you find the talent in Hong Kong to build the rest of the site?
So thinking that raising the money was hard, I was in for a shock when it came time to building the team. So I kind of went into this feeling overly confident. So we've raised $8 million. We've got what I thought was a pretty cool concept, had a good founding team behind it, but it was impossible to recruit people to join 8 Securities. Originally we were in a serviced office, so there was 5 of us in a serviced office. And we would get interviews, that wasn't a problem, people would come in, but no one was biting, no one was taking the role. And I could see in people's eyes they were interested in the idea of a startup, but ultimately what I learned being in Hong Kong, which was so different to my experience in Silicon Valley, was the risk aversion that most people have to starting a startup. So, at the end we thought we hooked someone, we thought, great, we want him on the team. But it was just, I think I'm going to take the job with HSBC, or I think I'm going to take the job with PCCW because it's safer, it's a bigger brand. We heard that over and over and over again. So at that point, I came to the conclusion, fairly slowly, that people don't want, that sort of pitching a startup and pitching that idea wasn't the way to go. So I kind of turned it around, started pitching the sort of benefits a little bit more. So, for a financial services company, no dress code, we're going to give you market pay, amazing benefits, and here, by the way, here's the business, this is what we're going to do. But I would say not until we were in our office with a logo on the door was it easy to recruit people. So probably it was hell getting from sort of 4 to 10, and then past 10, it became very easy when we had a real presence.
Thank God it wasn't 7 Securities then.
Exactly.
8 Securities really helped the local people that can join. I have some slides up here. Do you want to pull any slides up or anything?
No, we can just kind of keep talking. Yeah.
All right, so you found your team. How many people do you have now?
We are 30 now.
30.
30 people.
And where's your office?
Office is in the L Place, which is in Central, just next to the center. And the reason for doing that is all of our competitors have branches, so we're competing with a bunch of competitors that have street-level branches. A lot of people in Hong Kong still like to walk in, kind of kick the tires, that sort of thing. So being central was pretty important. Ideally, we would have liked a cheaper space out of Central, but I think for our business model, that makes sense.
So how long from the money to hiring to the office space did you actually launch the product publicly?
It was 9 months. 9 months end to end.
All right, so how did you launch it out?
The launch, we got, I think, incredibly lucky, and it probably led to a lot of the awareness that we were able to build, I think not only in Hong Kong, but more broadly. The TechCrunch had its first Disrupt conference in Beijing last year. And what we essentially did was, at the very last minute, we sort of looked at it, and it was very lucky, very last minute. And the rule for launching at TechCrunch was you could only reveal your product at the event. So if you'd done any PR, you'd launched a website, done anything, you were practically disqualified from participating. We were planning to launch actually a month after the event, but we said, all right, let's speed things up. Let's go for this. We didn't think we had much of a chance, but I think they had about 500 applications for TechCrunch Beijing. We were lucky to get invited, and then went on to the finals. And then by getting to the finals, it created a lot of press on TechCrunch. And I think that just led to everything else. So once we got on TechCrunch and were able to say we were a TechCrunch finalist, then the coverage just sort of steamrolling. Then you get on VentureBeat, then you get on Inc., and then you get on everybody's radar. And so for us now, getting PR has been one of the easiest things. And we do it all ourselves. But had we not had that validation from TechCrunch, it would have been an uphill battle.
Do you do any social media? Do you do Twitter? Do you do blogging? Do you Facebook? Things like that?
Yeah, we do. And again, it's not very common in our space again because most of our competitors are relatively risk averse. They don't want to have HSBC doesn't want to have a conversation with 700,000 people. So for us, it's been an advantage. We launched a presence in Facebook, Twitter, Weibo, LinkedIn. We run a blog, and then I like to write a lot. So I write for TechNode, Tech in Asia, do things like that. So yeah, I mean, we certainly do.
So let's talk about this slide up here now. You launched a campaign on Yahoo Hong Kong, right? To promote this site. The site's in English and Chinese, obviously, right?
Yeah.
So tell us about planning behind your media buy. What was the campaign concept, and a little bit about the budget behind it?
Okay. So one of the things that we were really challenged when we tried to raise money from investors and just talking to people in the industry was you can't develop a brand solely online, especially in Hong Kong. Hong Kong people, they're not going to trust an online-only brand. You've got to be an MTR, you've got to be on the side of a bus, you've got to be, an outdoor, and we kind of just said no. We want to spend 100% of our budget online, and all of our budget is applied against search. So we obviously do search and are very sort of acutely conscious of SEO, and then in addition to that, display advertising. It comes both in the form of banners, like what we did here, but in addition to that, we wanted to sort of push the envelope. So we're one of the first businesses in Hong Kong to use video advertising. And this one in particular was a video we did. It was 3 parts called Revolution, and we kind of positioned it to look like a movie trailer, knowing that no one gave a shit about 8 Securities, no one was going to click on 8 Securities, it's just another broker. But maybe if we sort of tease people, make them think this is something different, like why are they running a movie trailer on Yahoo Finance? It got a ton of clicks, or I think our click-through rate for anyone that's sort of close to online advertising was about sort of 0.45%, where our industry is at sort of 0.06, so it got a ton of clicks. Casey was in the video as well.
What?
Yes, you were.
But you have this beautiful girl involved. Where's she, by the way? Why are you? Why don't you bring her with you?
She's not here, but it's my co-founder's girlfriend.
So you source locally for talent as well.
We source locally, but my co-founder and his girlfriend have been having a lot of trouble, and I don't know if they're going to make it through the relationship because she can't stop talking about you. She can't stop talking about you.
She's got my number. So anything else that you do besides Yahoo Hong Kong display ads? You said you did a lot of writing, so you can write for other blogs for free?
Yeah, so do a lot of writing for other blogs, and if you write for Tech in Asia and you write for TechNode, they're usually very kind when you have a product announcement, and they tend to cover you. So there's sort of a method behind the madness for doing that. But I love writing, and I think just in terms of advertising, what's interesting about our business is our annual marketing budget is about 1.2 million US. And in Hong Kong, that buys a lot of impressions. So you can really be very dominant in terms of getting in front of people through financial portals and so on. So we'll spend about 1.2 million this year. We're the #1 advertiser in all of financial services in our space and brokerage in terms of online marketing, but we're number 9 overall. Now you sort of think about that for a minute. We're number 1 online, but 9 overall, meaning that all of our competitors continue to spend in TV, they continue to spend outdoor, they're doing all this traditional media, yet in Hong Kong, 70% of consumers are trading online. So the big conclusion that we came to very early was the consumers evolved, everybody's trading online, yet our competitors are just highly traditional and stuck in the past, and that's our opportunity.
Can I ask you, I want to be more direct about the local market. Obviously, you've done a very good job with the English-speaking market. How about the local market?
Well, we played it wrong. I mean, one of the mistakes we made is we have a multi-market, multilingual, multi-currency platform. And we thought that we would probably be more appealing to English-speaking people out of the gate. And so we had to set a sort of core language to launch with, so we could get sort of 2-3 months of burn-in before we moved to another language, and we made that language English. Surprisingly, 97% of our accounts are local Hong Kong Chinese, and we should have launched with traditional Chinese, and that was our biggest mistake. So for the first 2 months, all these clients came in, and were forced to deal with an English-only platform. So that was a big calculation error. So we should have launched with traditional Chinese instead of English, launched English later. We just launched traditional and simplified Chinese recently, but that was a mistake.
How long did that take to quickly assess that that was an issue and then change to Chinese right away?
Too long. The process took 2 months because getting our first language out took a while because we basically built a library. Now we can launch a new language. Once it's translated, literally in half an hour, we're just dropping it in and it's very easy to roll out. The first language was hard, so in hindsight, we did it wrong. But our marketing, and always has been, very, very local. We don't run that much in English. Most of our advertising is run in Chinese, and the whole team is Chinese.
So is there like a disconnect? I mean, you said 70% of people trade online. Is it easy for them to get into securities.com and start using it, or is there a learning curve? Did you have a lot of customer service questions? I mean, how did you deal with all this stuff?
Yeah, the biggest challenge is one of risk. So in a market where people are inherently risk averse, why do I want to move my money into an unknown brand, a new broker, my money's safe at HSBC? That was a huge challenge. So you overcome that one in time by building a brand that people can trust. But in addition to that, I think the other thing we had to consider was being a little bit more explicit about where clients' cash is and educating the market that when you open an account with a brokerage, your cash actually is in custody with a bank. So whether you're with HSBC or you're with Securities, that makes absolutely no difference. You're at no more risk. So other brokers could take that for granted because they've been in the market for 20, 30 years, where we really have to try to educate the market about how it's actually structured. But there's no doubt it's a challenge. That's our biggest challenge. And it's going to take time before people just overcome that you're a new business. And quite honestly, I'm very sort of vocal in the startup community, and it worries me sometimes because do I want Securities to be perceived as a startup, which of course it is, or do I need to think about the customer and try to sort of mitigate that a little bit and establish ourselves more as just another player? So it's always a balance.
On this next slide, I know that I've done a great job helping you to promote your company, as Isabella, but I see that you ran a giant campaign recently. Facebook went IPO in the States, and you were offering what? Free shares of Facebook stock? Well, it's not. Well, how did that idea come up? How did you implement it, and was it successful or not in getting new people to sign up for your site?
So the whole idea behind this was we knew Facebook was going to have incredible press momentum sort of before the IPO. Everyone was talking about it. So I was just thinking in terms of a promotion, I'd love to ride it. So we basically offer US equities. So we offer people access to US markets. So offering Facebook as a product or as a promotion kind of made sense. Knowing that there was going to be so much media attention around it, that would only help sort of elevate the promotion. So it was really more of a momentum thing. So we decided to give away $200 of Facebook shares. And again, getting away from the risk of giving a hard number, so rather than we're going to give you 10 Facebook shares, if the IPO pulls back or the price doesn't do well, then everyone's pissed off. But if you can offer $200 worth of Facebook shares, you don't really care whether Facebook's at $50 or at $10, you're still getting sort of full value. So we offered $200 of Facebook shares. I was at home at 11 p.m. the evening here, right before the IPO in the US. I was watching Bloomberg, which I don't normally do, but I was watching Bloomberg, and all of a sudden this popped up. And it was Bloomberg in the US talking about a promotion, and they flashed up the trading dashboard. They went through the promotion step by step. I mean, we couldn't have asked for, and it was largely positive. And they basically called it the internet version of what banks used to do in the past. So in the old days, when you opened an account in the US with a bank, they would give you a toaster, they'd give you a microwave, and they basically said this is the internet version of that. They're giving away free Facebook shares. And it was this hugely sort of positive piece. And it was incredible. And I think the only negative was one of the analysts came out and said, if ever there's a sign that internet IPOs are getting frothy, this is it. And it turned out to be true. But anyway, so we got Facebook coverage, and then we got picked up on TechCrunch, VentureBeat, Techno, TechNH. I mean, everyone picked it up.
How much is an ad campaign on TechCrunch? If you run a banner on TechCrunch, do you think?
I think if you were gonna pay for a month and you wanted to run banners on TechCrunch, it's probably at least a $50,000 investment.
So you got 200,000 US dollars worth of free advertising by doing this at least, right?
At least, it was incredible and drove a ton of leads. One of the fortunate things we've done is we actually host our portal and product in the cloud with Amazon. I think we're one of the few financial service companies that did it, but when we launched at TechCrunch, it was amazing. You just use a credit card and we can sort of scale up from 1 to 5 servers, go back when it's over, and with Facebook, we weren't anticipating the coverage we got, but thank God we did, or we would have crashed and burned.
Does that appeal more to like Western investors or local Chinese investors? I mean, everybody knows Facebook, right? So did that help you locally?
It helps immensely locally because people want access to it. I think people like the U.S. market and want access to the U.S. market because, quite honestly, the local companies, they're boring. They're in stodgy industries. There haven't been that many exciting IPOs. You've got banking, you've got manufacturing, you've got traditional industries. So all of a sudden, if someone can come out and say, look, we're giving you local access to Apple and Google and Microsoft and these big stories and big global companies, there's been a lot of demand. So another thing we got wrong in our projection was thinking that 70% of the activity would be in Hong Kong stocks, 30% in the US. It's actually been completely reversed. 80% of our revenue is going into the US market and only 20% into Hong Kong. But the Hong Kong market is incredibly slow right now.
Okay, that's so where do you see your company going now? So where do you see yourself in August 13th, 2013?
I think, knock on wood, I think we'll be profitable this time next year. Business is going really well, and I guess one of the things we did well was building on a relatively low cost structure. While 30 people sounds like a lot of people, it's about as small as you can run a regulated business in Hong Kong. So our cost structure is very low, our gross margins are very high. So the way we make money basically is we give our trading portal, all the research quotes, all of that away for free. And we basically make about 14 to 15 US dollars every time someone presses buy or sell. So typically, you have people trading all day, they're in and out of positions. That's how we make our money, and our gross profit on those trades is about 97, 98%. So we don't need a lot of accounts to break even. Things are going well, so as long as the sort of economy holds up, we'll be okay. And I was talking to someone earlier, based on my past experience in this industry, is I wouldn't be afraid of markets like this. So everyone's nervous, everyone's afraid, but it really creates incredible opportunities, and we've seen that. So we're actually looking at some interesting acquisitions in other geographies. We're getting a lot of people wanting to send B2B order flow to us because they want to cut their costs. We're competing with really big institutions, and that brings a lot of great revenue. So quite honestly, this bad market is creating more opportunities for us than had things been great and everyone looks successful.
That's a good lead into my next question. So do you think a banking or stock trading startup in Hong Kong is a good idea? Something in this industry?
Yes, and for Hong Kong, it's a sort of special thing because contribution margins in this industry in Hong Kong are very good, and because the business is largely offline. So you've got stagnant competition, you can make money, and the market in and of itself is big. So if you got those three things in your favor, I think you're in good shape. But I think any big industry in Hong Kong, I always advise people, if you're thinking about launching a business in Hong Kong, look at these traditional industries. I think you've got incredible opportunities with e-commerce and financial services. Look at the industries that are most important to Hong Kong and just tackle it, because quite honestly, your local competition is going to move slow. They're probably traditional, and you've really got a chance.
That's great. What are the challenges facing Hong Kong startups? You have a slide?
Not a slide, but yeah. I think one of the things that is obviously challenging is the ecosystem. And so if you think of the ecosystem as startups, as investors, as business services, so can you find a lawyer that's economical, that has experience in startups, that knows how to put together a term sheet and a shareholders agreement, and education. I think those are kind of the four pillars. And if you think of Silicon Valley, it's kind of the perfect storm. You've got amazing research universities, you've got startups, you've got investors, and that's why it's successful. Hong Kong has relatively young startups. I think obviously the investors are lagging behind, and I would say that for anyone in here that needs to raise money, the reality is you're probably not well suited for a typical institutional investor or a venture fund, only because they're looking for, as I said before, $1 billion exit. They're only going to make 5 to 7 investments a year, and those investments are likely going to be in China, not in Hong Kong. So it's not, if they don't invest in you or you don't get meetings, it's in no means a function of the quality of your startup. Your startup could be great, it's just probably perceived scale and how big you can eventually get. But I think, there's no shame in building a lifestyle business, building a $100 million company. No one talks about that. It's always about the $1 billion exit, changing the world. And the people spewing that are the VCs. They need people to believe that they can change the world and build billion-dollar businesses, or they're not going to have companies to invest in. So, I just caution startups in Hong Kong, when you think about investors, private investors are best. There are a number of groups emerging now that are organizing that. It's getting better. I personally think we should think about getting a drive going and getting people on, getting the startups and investors in Hong Kong on Angel List. Start getting something going, structuring it, but we'll get there.
Do you want to talk about this list here?
Yeah, so just a few points here. Just some advice. I think first and foremost, you have to be brave. You've got to tackle this head on. You can't hedge risk with a startup, and if you hedge risk and you're keeping your day job and you're doing this, it's fine, but at some point you got to go all in. And I think you need to be brave, and I think that's the one thing in Hong Kong I'd like to see more of. People just need to go for it. And I know, Hong Kong's an expensive place, and it's difficult. There's not a lot of support. I think a lot of Hong Kong kids coming out of school, their parents aren't necessarily supportive. They would rather them work in a nice building and work for HSBC. And there's a lot of reasons to not do it, but I always sort of counter that. In the States, it's not that easy either. In the States, the typical kid, graduates high school at 18, they leave the nest, their parents aren't looking after them, they take student loans, they've got to, they're sort of going it alone. So, risk is relative, but everyone carries it. So I think we've got to do more of it. Acknowledge your weaknesses. I think it's very, very, very important to be very honest with yourself about what you do well, what you don't. Suck it up and hire people that can cover you. Very, very important. You got to put your sort of pride to the side and hire people that are going to complement you.
Example? What can't you do? You seem like you do everything.
No. I'm not technical, so I'm a sort of non-technical founder. I throw out words like multiplexer and router and cloud once in a while to keep people honest, but I don't know what any of those things do, honestly. So I think, so I have a great sort of development team behind me. I am actually, might be surprised, but I'm actually incredibly introverted, and I'm not a particularly social person. My partner, as you know, very extroverted. He's really flamboyant, and so we complement each other.
Right.
And he's French. Yeah. Another thing is always remember your customers give you revenues and not your products. Don't get too fixated on the product. Never lose sight that someone has to buy it and use it. I know it sounds obvious, but sometimes it's easy to forget that. The most important thing I tell you is focus on design and user experience. So many startups in Hong Kong are founded by technical founders, and that's definitely a good thing because you're building a product. But too many people are fixated on engineering and features and building out features. And what ends up happening is if you think of your product as an iceberg, engineering is everything below the water. You just have to remember that your interface is the product as far as your customer is concerned. It's the interface. So I would highly recommend that you bring a design-oriented founder into the team if you don't have that skill set, and I think many developers don't. Bring in design, bring in someone that really understands user experience, simplify, and go for it. The one recommendation I'd give you is, you mentioned Dave McClure before, his whole sort of philosophy around design, distribution, data. Learn about it. He's so right. It's so important. And look at his portfolio of startups. Just look at every one of them. They're beautiful, they're simple, they clearly solve a problem. I learn a lot just by sort of going in there once a month, seeing what's new.
500startups.com.
Exactly. Your product won't go viral. I can't tell you how many startups I meet how many investors I talk to where they meet a startup, there's no marketing budget. I actually just wrote about this the other day. You don't have a marketing budget because your product is going to sell itself. It's not. It's not going to sell itself. Twitter is not going to be the answer to your marketing strategy. Nobody reads your blog. And the only people responding on Facebook are your best friends. I mean, the reality is social doesn't work for marketing. It just doesn't. So the reality is use it, build community. I'm all for it. Start with it. But it's no replacement for advertising. And there's a sort of adage used that it takes money to make money. I believe that. I think if you're trying to build a big business, you're trying to build a consumer business, you need to go in with force. And I don't take spending $1 million lightly in terms of advertising, but we measure our ROI, we know if it's working. If it's not working, we admit it and we adjust. But it takes money to make money. So all I'm saying is whether you're spending $1 million or you're spending $1,000, just accept that there is value in paid advertising, because it feels over time, paid advertising has become like a dirty word with the whole lean startup movement, and it's become a sort of nasty thing where I don't think it should be. Raise as much money as you can now. Things are only going to get harder and harder and harder and harder. Sorry, it's true.
You raised $8 million, but you also just recently went back to raise more.
Yes, we raised 8, and then we raised another 2. That was about 2 months ago. But I promise you, we would not be able to raise that 2 today, at least not on the valuation that we raised it. It's just getting harder, and I think what's going to end up happening is all the sort of pretend angels that are out there that like the idea of investing in startups and drag you along and tell you they're interested and it goes nowhere. A lot of them will probably disappear because they're under pressure, everyone's under pressure. But hopefully the more serious private investors will emerge. If you have a good idea, there will always be capital there to fund it. If you've got a good idea, you will get funded. The market is that efficient, so don't give up. You will get funded. It'll take longer than you anticipate. Probably won't be on the terms you want, but you will get funded. Just think long term. You'll be fine, but raise as much as you can now. This idea of raising in rounds, I don't think it's a good idea, because the beginning of a company is the hardest part. So you say, I'm going to raise a little bit now because in 1 year we're going to be generating so much revenue that my company's going to be worth so much more, and I'm not going to get diluted when I raise my second round. It's not going to work like that. The opposite will happen. You raise money now, your company won't be doing great in a year, and you're going to get killed by your investors and lose majority, and that's typically the way it goes. So you can raise a lot now on good terms, do it.
And the last one?
Enjoy the journey. I mean, I tell my wife all the time, it's the best decision I ever made. The worst thing that happens is it doesn't succeed, but you just sort of try again. And I think we can all just sort of accept that we're in a very fortunate position to be launching a startup or thinking about a startup. And it might take 1, 2, 3 tries, but keep at it. But enjoy the journey, because as hard and as difficult it is, it just doesn't get any better. I mean, to get to go to work like this, or work at a bank,
you look
come
great.
on.
Okay, this is the lightning round at the end here. I just want 1 sentence answer for all these questions. What keeps you up at night? 1 sentence, please.
My 2-year-old, because sometimes she comes into bed and pees on me.
Wow. Okay. Okay. What is the most important social media to you? If you just choose one of all the things you talked about, which is the most important one?
The blog, because I love writing, and I think it helps people understand my mission.
If you can have anything for your startup, what would it be? Money's not an object, what would you want?
No employee attrition.
What startup or tech or company that is out there now gets you the most excited?
Maybe 2. Square, Jack Dorsey's new company for person-to-person credit card processing. And I think the most important startup in Silicon Valley, or one of the most important startups I think we'll see, is AngelList, because it's completely disintermediating the way money's raised by startups.
Okay, great. Okay, that's the end of our interview. Are there any questions from the audience? Raise your hand. You have a question, Mikaal? I know it's fantastic. Okay, I'm going to come out here. Get this gentleman over here. What's your question?
Mate, just a question regarding what you said about funding. If you follow your philosophy of the fact that you raise as much money as you can now, doesn't that automatically imply that you think the value of your business is going down? And then it's going to be worth less in a year than it is now?
No, because there's two parts to that. One is a good question. One is, by raising, if you're able to raise at a valuation that you think is fair, our view was we raised enough to get us to cash flow positive and to a point that we can start self-investing our own profits to grow the business. So from that perspective, we weren't challenged with a view that in the future we would even raise another round. I think the other part is just one of the market getting more difficult. That was another point to what I was saying, is that if you're looking to raise $100,000 or $200,000 in total, say, at least it gives you enough runway, try not to raise 25 now, because personally I think things are just going to get more difficult down the road. So if you've got an opportunity to raise it, you're happy with the valuation, you can build in certain clauses with your investors, I would do it that way, personally, but to each their own.
Question over here.
Very useful information. And I remember that you mentioned you have a bunch of investors like lead investors, and you mentioned that one of them is the lead investor. I just want to know more about how the lead investor is. How does this thing work? Would the lead investor do anything, or you just use the name saying that this is our lead investor, and so you might want to join with his investor? Yeah.
No, it's a great point. So our lead investor isn't famous. No one knew them, but they invested 1.5 million in the business. That was their first injection in the company. And once they did that, and once we could go back to all the investors that were on the fence and say, look, we've just raised $1.5 million. We only have 6.5 to go. People that genuinely want to invest in the business know they have to move, because other people will start investing. I think if you get a lead investor with a big name, it can only help. It can only help. And our lead investor, the promise was, you're the first money in. They were awesome because they didn't ask us for any preferential terms. They said, we want to go in with everyone else as long as you sort of close your round in 2 months. Let's go in with the right attitude with the other investors. We'll all go into the same terms. We gave them a board seat. But they were more than helpful in making introductions. But if you've got a big name and it's helpful, by all means, you should use it.
Another question over here.
Yeah, is the Hong Kong market for you big enough to sustain you to cash flow positive? And do you think other startups can have a strong enough base just in the Hong Kong or the local area market, or do they have to go global?
It's a great question. So our strategy from day one was to build a product that could scale globally, and it kind of played to our own experience. We've all lived and worked in sort of across the world, so we want to build a global business. Hong Kong for us was a very good market to get to cash flow positive. For us, it's about $1 billion market in terms of revenues generated. Okay, so sort of per annum. So, if we can take 1.5% to 2% market share, which is we think we can over the course of the next 3 years, we're profitable. We're generating enough cash to start investing more in this market. But it is absolutely our ambition and plan to launch in other geographies. And our whole view was, let's get to profitability in Hong Kong, prove the model works, and then think about what other geographies we want to go in. Because you're right, Hong Kong in and of itself has its limitations in terms of size. But in our specific market, it's the 6th largest stock exchange in the world. It's a very important financial center in Asia. So for financial services, it's big. For other consumer businesses, it has has big limitations for sure.
Great. Okay. We're going to stop it there. Check out the cartoon here. Be brave, bring in design. There's value in paid ads. There we go. We'll post it on the website. Let's give a round of applause, Mikaal. And find the drinks and the food. So let's make it louder.
And if Casey doesn't mind,